Hello and welcome to another update video on gold. We are here on the gold futures chart and we are pushing against the 88.7 Fibonacci retracement of the last decline that occurred between the 13th of June and the 30th of June. So we have this dip, this decline, and then a corrective rally so far that could turn into something more bullish, however. So let us talk about the scenarios I'm still tracking, and I will share with you what my preferred scenario is. Has anything changed to yesterday? Because obviously we've pushed a little higher. We've pushed above a key level, right? We've pushed above the 78.6 retracement here in this rally to the upside, which is a little bit more aggressive than what a wave 2 in the white scenario should really do. So the question is, have my perspectives changed? Has my perspective changed? Do we need to be a little bit more bullish? Well, I mean, the white scenario is, as I said to you yesterday, the bearish one, short-term bearish at least, but is not preferred anyway, for various reasons. I explained that yesterday. It would require a break below the red line at $3,250. That's the 27th of June low, or at least here, a break below the 9th of July low to confirm this one further and to start to rule out the orange scenario. But orange will really only be invalidated as it is below the 27th of June low. So yeah, I mean, I said I really like the orange count, right, in which we could be working on a triangle. So we talked about the white count, right? A wave, B wave, 1, 2, 3, 4, 5. Now, before we go to the orange count, the white scenario, which is the bearish one, short-term bearish, they are all bullish overall still, okay? So I do not assume yet that gold has formed the major top. I think that's very, very important. And I honestly, I need to see some downside momentum to clearly favor here the white scenario that would involve a break below those levels I mentioned. We are pushing higher here in wave 2 still, and the wave 2 normally we say shouldn't break above the 78.6 retracement, at least not decisively. And if it does, then it doesn't rule out that 1-2 setup until we really break above the beginning of the wave 1 to the downside. That's where the green line is at $3,475. That would be the invalidation point of the white scenario, a 1-2 setup to the downside. Well, but we haven't invalidated it, but with a break above that 78.6 retrace level, white has become a little bit less likely. That's the new finding based on latest price data. Now, does that mean we break out directly? Potentially. That's the green scenario. Before we talk about that, let's talk about the sideways range in which we are, which is the triangle. And again, they are all bullish, right? Because even in the white scenario, we would form an ABC structure to the downside, and that C wave could take us into this box, and then from there, we could see an upside breakout. In the orange scenario, we're tracking here a triangle, A, B, C, D, E. And the triangle is the wave 4. So instead of having the wave 4 as a classic ABC flat structure, the wave 4 is a triangle. That would involve another dip potentially, another higher low. And therefore, I said the red line needs to be broken to kind of rule that out, because a triangle is characterized by a series of higher highs and higher lows and lower highs, okay? Typical triangle pattern. And at the moment we see that. But if we break out above the green line, that's our swing high from the 15th of June. There is no sequence of lower highs. That would indicate a direct breakout. So that would involve then the green scenario, which we talked about when we talked about this setup here, this 1-2, 1-2 setup. So I don't have a long trade setup now. This was a long trade setup, basically a support zone. Now we are running into resistance. Now, I don't call that really a short trade setup until I see a little bit more downside momentum here. We need to see a break of downside momentum. I mean, you can trade it short if you want to, good reward to risk ratio. but the invalidation point is clear, right? Now, in the green scenario, this would be a wave 1, this would be a wave 2, this would be a wave 1, this would be a wave 2, and we're now in the third of a third wave. Soon we should start to see the fourth wave. So I can define Fibonacci support for that green wave 4. How do we do that? We take the length of the third wave, and we're tracking the 50% retracement to the 23.6 retracement. So what we don't want is a break below 3,381. But I have to say, if this is really an impulse, the price must actually hold above the high of wave 1. So actually that's the invalidation point for the green microstructure, which means, very simple actually, to keep the direct pressure up, the price should hold above $3,389. Below that level, we would have our first evidence that a top of sorts is in place, and that could involve then, for example, the E wave to the downside. Yeah, it would be an indication that the E wave down is starting. I hope that helps to clarify the situation. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in additional updates, yeah, make sure you join us in our stocks membership, where we cover gold as well, and silver, but also the S&P, the Nasdaq, and so much more. Thanks so much. Bye-bye.